Today's market call is presented by CME Group, where risk meets opportunity, and FactSet, financial data and analytics powered by tomorrow. What up, peeps? It's Tuesday, the 11th of June. Bill Hockman's here, getting stuff done in the control room. We're waving at Bill. How are you, Dan?
I'm doing great.
It's market call, by the way.
Yeah, it is.
June 11th, 1 o'clock on the East Coast.
Coast.
Another bizarre day. The days get stranger and stranger. You're looking very relaxed there. What do you call that shirt?
I don't know. It's like a polo shirt, but it's like a button down, so it's like a soft, cotton guy, and it's
Soft cotton.
It is. I am relaxed in it.
Should be relaxed.
Yeah.
You know who's not relaxed? The Edmonton Oilers down 2-0 going to Edmonton.
Oof.
That's a tough
Dallas
road
Mavs
to hoe.
Down 2-0.
Yeah, Celtics are just better than everybody else.
Better.
Celtics are just better.
Yeah.
And Kyrie just can't get it done in the Boston Garden.
Nope.
And the Boston fans let him know.
Every time he touched the ball,
boo.
when I was there, boo. Yeah, the boo birds were out.
And it's amazing. And Amanda's like, God, please stop. But Kristaps Porzingis played for the Knicks. Obviously, he's with the Celtics now, and he's got a huge role there.
Yeah.
Yankees won last night. Carlos Rodon, who the last time he was in Kansas City, the last weekend of the season, effectively, I've never seen this before. I don't even know if it's happened before in professional baseball. He let up 8 earned runs without recording an out.
Wow.
Horrible.
Yeah, that's nice.
And then last night, obviously, though, he's changed the narrative this year. He's now 9-2, pitching to a sub-3 ERA.
Yep.
Okay. Let's put the rundown up. By the way, Carter Worth is going to join us.
In just a few minutes.
Dan is like, please move on.
In just a few
Apple
minutes.
joins the AI rally. Yes, it does in a meaningful way. And there's a lot of volume trading today in Apple. I don't know if that's a good thing or a bad thing. We will discuss. Stocks whistling past a graveyard, not the graveyard, a graveyard, which is an interesting choice of words, Amanda. Banks breaking trend to the downside. And if we have some time, which we will, we'll do a little audience Q&A.
Yeah. All right, let's do this really quickly here because we don't really need to go over this. But the Apple up 6% guy on the day. Just do the math on a $3 trillion market cap. Oh, you can do that.
I can do that math.
Okay. This is so right next to that headline. You see that huge move. It's breaking out to the upside. Let's throw a 5-year chart up there. I'm actually really shocked by this. Okay, so this event happened yesterday afternoon. I mean, this is a monster breakout. Guy. Let's be clear, and we'll get Carter's take on it in a second here. But I'm just for the reasons, that it's up. I'm just surprised because the only thing that you could kind of justify here is that Wall Street consensus for EPS and sales are going to go up meaningfully next year. Okay, so I just don't see what they introduced is something that would give you greater confidence. The only thing that you could do is think about, an upgrade cycle,
which was going to happen anyway.
Right. Okay. And then
I think, I don't know. I mean,
and then B, greater services revenue in and around, let's just say, like the developers creating apps, right, that are, using some of this technology that's now embedded into the phone. So it's just not a layup here. And I'm just surprised, Guy, to see 6% higher because no one on the street, I guess DA Davidson upgraded the stock. I don't know this DA Davidson.
I don't know this Merle.
Yeah. I don't know
what he does. You're gonna. That was a great scene. That's obviously Godfather too.
And this is
Michael is a fucking killer. And somebody's gonna be like, "Oh, Guy cursed." Okay, relax. Number one. But he's sitting there like in his study.
Yeah.
It's like it's a bigger room.
This is Tahoe.
And Connie comes with Merle, and she wants to book passage on the Queen.
Yep, they're getting
and why don't you go to a bank?
They're getting married.
I need money. Why don't you go to a bank?
Yeah.
And listen, Michael's upset at his sister, which I get. She blames him. She blames him for Carlo's death, which she's right.
Yeah.
But Carlo Carlo deserved to get whacked.
Yeah. Did Fredo deserve to get whacked?
Yes, unfortunately he did.
To his own brother.
Let me tell you.
In the order.
I mean, Fredo betrayed the family.
Yeah. He didn't really know, and he's weak.
No. Can I say something? Okay, fine.
Johnny Ola lied to him.
No, come on. And what, Fredo didn't know that?
He's dumb.
I never ever met, John? No, we've never met. Remember that scene?
Yes, and
you ever met?
And
then they're in that sex shop.
20 cocktails later in Fredo.
Old man Roth will never come here.
No,
right.
No.
And that's when Michael realized.
Johnny Ola told me about
I'm sorry, Amanda.
But you know what, though? Fredo broke Michael's heart.
You did.
Yeah. What do you think was going to happen to him if he said when they left?
It's interesting,
what
by
do you
the way.
think was going to happen to him if he said, Fredo,
come with me.
You're still my brother.
No, I think he probably would have gotten him out of there, is my sense.
Yeah.
But, you know, in
What do you
retrospect, he
think
thought
they
it
did
through.
with Fredo's body? Like what, you know, like they
They
didn't
weighted it down
no,
and they
but they
put it in the lake.
I know, but they didn't make it an accident. There's not going to be a missing persons
He,
report.
he drowned fishing. He fell out of the boat.
Come on.
What do you want me to tell you?
Yeah.
I don't know what to
Who
say.
swims with the fishes?
Luca Brasi.
Yeah, that was in the first one.
That's Lenny Montone, by the
You know
way.
who's getting super annoyed with us?
Amanda's.
No.
Carter is.
All right, let's do this.
Who is? I have no idea.
Let's just bring Carter Braxton Worth of Worth Charting, because we need to. He can't sit here and listen to this. Is not Siskel. So, look how annoyed he is.
So
this is not Siskel and Ebert.
I will
guys.
tell you.
Good.
I'm
all
one.
good.
Actually, you're going to Europe next week.
Yeah.
And you're going to go to like museums.
I didn't book passage though.
That's like a Francisco de Goya painting. Oh, nice. And you know, well, I say that because I don't know.
Passage.
Book passage.
He didn't book passage.
I don't know if Amanda can do this. Remember in the movie Wall Street 2, Money Never Sleeps?
I never saw it.
There's a painting of, I believe it's Mercury eating one of his children. Oof. And that's painted by Francisco de Goya. And it's a very similar.
Yeah.
Okay.
So it's
I don't know. Again, I don't know if Amanda
can classic de Goya.
But okay.
All right. You know who booked passage on the Mayflower?
Carter's family.
Carter's ancestors. All right, Carter, really quickly. I'm sorry, buddy.
Yeah.
You see
Apple
that?
breakout. I mean, you know, breakout to breakout. That's the beauty of it, right? You can get into the why. Did D.A. Davidson upgraded, or you just go with the flow? The question is obviously what kind of follow through. So we just did a standard 1-year chart or 2-year to drill down a little closer to look at the breakout in the context of the tops. Here it is. Is it AI or IA or AA? I don't know, AA in the basement? Or, I mean, look, at the end of the day, a breakout's a breakout. How far does it go is anybody's guess. But Apple, we know its relative performance to the tech sector. There's a chart that depicts the breakout in the context of the recent preceding tops. AA's relative performance, Apple's, to the tech sector, XLK, peaked in September of 2022. And we're now June of 2024. So 2 years ago, Apple put in a relative high and now is trying to recoup some of those relative losses. So what to do? I would say Apple's an equal weight here, to use one of the silly words or thoughts of Wall Street, whereas it's been right to be underweight, again, for the past 22 months. It's probably not right to be underweight anymore. I would just have it a weighting in line with its representative weighting in whatever index or benchmark one is at the professional level trying to beat, and leave it at that. Does it have to be a big overweight? Is Apple going to go up 30% because of IA, AI, AB, IO? I mean, no. The breakout, we'll see how far it carries. I would just no longer be aggressively underweight or short.
Let me ask you this question, because today, so this is a stock that typically trades 60 million shares a day-ish. I think Dan can probably see it before but I think it's already probably traded close to 90 million shares today, which means it's probably on track to
109 million.
109. So it's gonna trade a little north of 2 times normal volume today. Is that interesting? Is that representative of a breakout to a new, or
there's never been a breakout without heavier buying? That's definitional, right? I mean, it takes a lot of buying pressure to force a stock above former highs. A lot of money pushing in, going in. And as the breakout goes, you draw in chartists, you draw in momentum AI machines, literally programs, which are AI. Say, hey, this is breaking out. It's moving above all discernible tops in the money. It's an automatic kind of thing, self-fulfilling, some say. But volume is heavy, and it'll be very heavy today, right? It's 22 billion traded value now. It'll probably end up being about 35 billion on the day.
And this sort of breakout, I mean, listen, you know, maybe it's technical. You know, Carter, you heard us just talk about the fundamentals here. I mean, there would need to be a meaningful, you know, bump up in consensus EPS estimates. Now, you could say, well, if that's the case, then the stock, this is what investors are getting in front of, right? Because if you basically have earnings go up and the stock's trading at 27 times this year, 25 times next, I mean, you can do the math, right? So, but from a technical standpoint, I get it. From a fundamental standpoint, I'm still a bit skeptical, but you know, this move is this move, and it's really shocking. Carter, what do you make of the idea that maybe you're seeing a rotation out of banks into, a massive $3 trillion name. Let's pull up the BKX. We have some charts. Our friend Doug Cass from Seabreeze mentioned that he has been short, and we know that the bank stocks in particular, this is a space that, I think this is really interesting. That is a meaningful uptrend, right, from those October lows. It's broken below that. Citigroup looks a lot like, if we want to pull that one up, the KBW or the BKX here. And then JP Morgan is sitting right on that uptrend. So you see a little bit of degradation in some of the large bank stocks here. Thoughts on that, Carter, and thoughts on the potential that it's just a rotation? Because we're going to hit yields in a second, but yields aren't moving a whole heck of a lot either.
Yeah, I mean, look, banks had a big move. JP Morgan, American Express, and bank type stocks were up almost triple the market's move from its October lows of last year. Our market be up 28, and things like Goldman, American Express, JP Morgan up 40, 50, 60%. So some of it's a give back in relation to the preceding outsized strength. But it's the KRE that's really taking it on the chin. There was never any relative outperformance in the KRE. And that is making new relative lows now. It's just it's a tough. At the end of the day, one of the things about valuation, when you have no profits, you get the highest valuation ever. Right? That's called biotech, because you can just make your multiple on your dreams. We all have dreams, and so if there is nothing to pin to tether to, you can get away with anything the imagination will allow, one's own imagination or that of a securities analyst promising great future potential. Once you start booking profits, or profits that one can put a valuation on, that then becomes harder to justify excessive. But still, you can have dreams in the tech world. There are no dreams when you're operating a lending business. It's just what it is. You have the money, you lend it out, you have delinquencies, you have charge-offs, you have interest rates. And so this kind of thing, this is dirty stuff, right? We know that the relative performance of the financial sector and the BKX is below right now where it was in 2009 at the Lehman lows, Bear Stearns lows. Generally a hard business. There are more bank failures in this country than any other business, period, hard stop, in the tens and tens of thousands in the history of the United States. And regional banks are just a tough place to be. Now, are there winners? I'll stop here. Of course, there's always going to be someone who's better. Jamie Dimon is obviously better at operating a bank than a lot of people. But in aggregate, it's just not an area that I want to be in.
I think the bank story is underappreciated. When Jamie Dimon came out a couple weeks ago, Dan, and said that, I'm paraphrasing again, they are no longer buying back stock. He thought this stock was expensive at the current levels. The current levels, I think at the time, was either side of $200, but it wasn't the absolute price, I think, that concerned him. I think it was some of the other metrics around it. And I think he's right to bring that up. And, quite frankly, the stock didn't really go anywhere. This is probably the lowest we've seen it now over the last couple of weeks. But I think he sort of set that precedent and created that bar. I have been concerned about the KRE for quite some time. We talked about it yesterday. I still think it breaks down. I'll say this quickly because we want to talk about rates. There was just a 10-year auction that apparently went well. If Amanda can pull up, or Jacob, a TLT chart, a daily, you'll see we just basically went from 91 in the TLT up to 91.40 something. So that suggests, again, the market viewed this as and to do shorter term, you see what I'm talking about, a favorable auction, which, probably has yields down slightly. So we'll see how the market reacts to that. There's been, maybe the NASDAQ sort of bounced up a little bit on the back of that, but I just wanted to throw that there just for sake, so everybody knows what we're looking at.
Let's spend a minute on the bond market, on treasuries here. And there was an article on Bloomberg that kind of caught my eye. This was by Simon White. Bonds are sleepwalking into a liquidity calamity. Guy, this is kind of speaking your language a little bit. I saw this morning. The treasury market is on thin ice as already poor liquidity deteriorates further. Inflation complacency and overly negative growth outlook, increasing supply of duration and compressed volatility leave bonds susceptible to much greater downside than upside risks. Okay, so greater downside would mean higher yields. Guy, so talk to me a little bit. This is actually, they could have put Guy Adami's name next to this thing. You've been saying this for a while.
I think there's a lot of credence in that. I mean, I do think that is the bear case for bonds. That's the reason a lot of people think, or some people think, that yields can go higher in this environment. I'm obviously one of those people. JP Morgan, Marko Kolanovic had a note out, and that's that whistling past a graveyard tease that we had. This is his note talking about, the abundant risks out there. And I think this is probably one of them as well. Again, I understand Carter's work. And quite frankly, if you go back and look over the last year, when yields were at their low, he said, this is where you fade it. This is where yields go up. And when yields spike, he's played both sides of it and he's done it extraordinarily well. I'm one of these people that have thought for a while yields will go up. And I look really smart sometimes and really dumb other times, which is typical of what goes on with me. With that said, this auction notwithstanding, I do think there's going to be a lot of pressure on the bond market going forward. And clearly now some other people coming around to that way of thinking.
All right, Carter. So you made this point on many occasions on Market Call to your Worth charting subscribers, your institutional clients. You're saying, hey, listen, this is probably where they should be, right? Yields, they've been this way for a year.
Right, if one could ever use the word should, it could be that all of this, where all of our efforts and toiling and spinning, higher rates, low rates, maybe rates are just tethered here. But what we do know, of course, that, and there's no way around this, right? The only great wrecks that occur in corporate America, it's always one thing, debt, right? If you have no debt, you can manage on, slow on. So the great catastrophes, both at the market level, at the individual company level, have to do with leverage. Leverage is a great thing until it turns around and eats you. And so the big risk is, just as you all were talking now, is that were there to be some sort of liquidity crisis, and were bonds, were yields, buyers stepping away, and all of a sudden yields went from 4 or 5 quickly to 5.05. We moved up 30, 40, 50 basis points, and then all of a sudden it was 5.20, 5.30. Well, what we know is that if and as that were to happen, it's the rate at which it would happen. The first thing to happen is you will have a stock market drawdown. Let's use a nice word. The C word's right. The crash word is not an appropriate word ever. But you will have an aggressive re-rating of equities. And were then it to get more severe, and all of a sudden you're moving into the mid fives, at some point, of course, you know what happens. The teacher walks into the room and says, all right, break it up, break it up. The government, they're going to step in because they can't lose control. So then the question is, do they ultimately step in, they being the Federal Reserve, and does that halt right there, and ultimately the rates come back down? If you were to play it out, that would be the sequence,
right?
Almost definition.
But I think, Carter,
if any of us sitting around thinking that they being the people who have some levers to pull, we don't, watch rates go to 5.75, 6.05, 6.30, no chance, right? They know what happens and they will intervene.
Yeah, but I guess the question is, what are those levers to pull right now? And this is a very different environment than the times past, Guy. You would agree with that, when they've actually, just said lower rates, because the very thing they're trying to combat, which is inflation. And listen, tomorrow morning we're going to get CPI. Tomorrow afternoon we're going to get the Fed. Are they going to be more dovish than people think? Are they going to be more hawkish? Are they going to kind of toe the line? And let's just pull up the CME Fed Funds tracker here, because I think, again, this is kind of interesting. This has been a moving target all year long, right? So you look at tomorrow's meeting, there's basically no chance that we get a cut. If we go to September, we're just going to skip the summer here a little bit. It seems like a coin flip, Guy, that we get 25 basis points, but a lot of folks are kind of like thinking about, okay, that election on November 5th, let's not get in front of it. A 25 basis point cut doesn't do a whole heck of a lot anyway. And then we get to December, okay? And so you look at this and you say there's about a 39% probability that we are going to have a 25 basis point cut. There's a 37% probability or so that we have 50 by then, right? And you see that there's a 12% chance that it's unchanged and 11.5% chance it's down 75 basis points.
Right. So basically, December is what the market is focusing on. 70%, 75% chance of some rate cut, whether it's 25 basis points or 50 basis points. To me, that makes the most sense. Okay, but let's go to that now financial conditions chart, which we have, and take a look at this, because this sort of flies in the face of everything. I mean, one would think, given all the tightening we have done, and it's been significant over the course of the last few years, the financial conditions would be as tight as they've been in quite some time. As it turns out, that's not the case. As a matter of fact, it's the exact opposite. So, I'll say, if the market is if this bullishness in the market is predicated on rate cuts and easing, you look at this and say, maybe not so fast.
Right. And then, Carter, we want to talk about commodities here a little bit, because, again, that would be fear, right? Is that you'd see, commodities just take off again. We know that if you go back to the 70s, right, we had, a big spike, right, in inflation. And then, obviously, in commodities and the like, and we saw it come in really hard. The Fed took their foot off the pedal, and then we saw it reemerge. And I guess the big concern is that, this higher prices become entrenched in the economy. We get a stagflationary environment. Again, I don't know what's going to happen. I'm not an economist, but when, Guy points to that easing or the easy financial conditions, that would be the thing. Listen, the people at the Fed are smart, okay? Like they know, and Fed Chair Powell knows this is going to be his legacy, how he deals with this. And I think these people care about their legacies. So thoughts on commodities here. Are we off base if you think about it?
I mean, they're all there. We've had a huge, the biggest moves really in quite some time are on record. Cocoa, orange juice right now. We saw that in lumber back 4 or 5 years ago, but they always mean revert. But one thing we were talking about is what are the levers they can pull? It's endless. So they can ban short selling. We know that happened in 07 and 09, 750, 800 financial institutions, you could not short them. Short selling was banned in the Depression. It was banned in the War of 1812. It was banned. I mean, levers, they can do whatever they want. Now, can they get away with that? I don't know. But if there's some thought that people are going to sit around and watch rates go to 6 and 7%, we will be looking at a nuclear winter, and the government knows it.
Let's take a look at your charts, Carter, because you brought some copper charts, some gold charts, and let's run through them.
Copper, well, a great winner, draws in a lot of money, and of course, all the people at the end get smoked. Let's put some lines in. Now we have a 15% give back. Let's put some more lines in. It's down to support. My hunch is you play for a bounce. Let's look at this same circumstance, the current circumstance in the longer term chart. There it is. Another way to draw the lines. Let's flash those back and forth. The point is we've given back a considerable amount. We're well into support. And my thinking is you take advantage of this 15% sell-off. I'm a buyer.
I agree with you. I'm surprised at how quickly it's given back basically half the move we've seen ish. With that said, the supply demand imbalances in copper, which got us to where we were, a month or so ago, have not abated at all. And I think a large part of that move, Dan, just my opinion, was predicated on some of the soft data we've seen in the form of ISM and some of these other things. So you have this conflict going on, not only in the bond market, but in the commodity market.
Yeah, and I guess, the softness that is starting to emerge out of some of the data, the softness, even though China sounds like an all-out disaster right now, like literally, and I'm using the D word. It's not the C word, but I'm using the D word. And, I just had dinner last night with a friend of mine who spent 10 years with a, boutique investment bank in Hong Kong, but he did a lot of business in mainland China. And what he's hearing, and he used to be a huge China bull, okay? And maybe that was just his proximity to it and the business that he's just hearing it's an outright disaster. And when this real estate thing finally, kind of blows, because again, you talk about levers, Carter, that centrally planned government is doing everything in their power, to kind of avoid a credit crisis and the like here. So China is weak, and that should not be that supportive of copper. But I think I see what you see from a technical standpoint. It makes perfect sense, especially after the move that it had. For it to retrace, all of that would seem highly unlikely before a retest of those recent highs.
Well, that's my thinking. It would take a lot to just give back all of this. And when you start, it's the equal and opposite moment of what it was just 2 months ago. 2 months ago, you literally have articles every day about copper. And it's true. It's a very long cycle thing. You can't grow more like orange juice and corn, right? You got to do a lot of digging for this stuff, and you got to find it and so forth. So really long cycle. And there's been very little investment over the course of the past 2-3 years. And so whether there's an immediate shortage or long-term shortage, the sequencing, you get all these people drawing in, it's going to go forever. And of course, now you've got articles about AT&T and Verizon digging up old copper that's buried in the ground to sell this stuff because it's so dear in price. But this move like that, a 20% advance, a 10-15% give back, that's an appealing setup to my eye for playing for a bounce.
One that sold off
we
pretty
shall see.
aggressive, and I agree with you, by the way. We got a pretty significant sell-off last week in gold, and we have charts that you brought on that. But on the back of the fact that the Chinese announced for the first time in many, many months, if not over a year and a half, that they did not buy gold in the month of May. I'm not sure what that was on the back of. Maybe some of the things Dan's talking about. Again, I don't know. But the market obviously didn't react in kind or kindly to it. It reacted in kind. However, I still think gold's in play here. So walk through your charts, Carter.
I only have two, so we can flash them 1, 2, 1, 2. We broke out, right? And here too, you draw in a lot of people who never like gold, and they buy at the top. That's how you have to. It has to be that way. We've all been the sucker, and sometimes one's not the sucker. But you draw in people who don't like gold, never talk about it. They go, it's fantastic, and now those people are getting smoked. Does it have to check back all the way to the level from which it broke out? No. I would think it continues to consolidate here, back and fill to work off the overbought condition of the preceding 2-3 months, and then ultimately press higher. I'm in the sort of 2550 to 2700 an ounce camp, and so dips like this or fallow periods, I would add to position or initiate.
Fallow. All right. So Bitcoin in March made a new all-time high, I believe, of 73,000 and change. It sold off. It came back. So we have now challenged that sort of 72, 73,000 level a few times, and seemingly, and I want to be careful here, failed. So what does 66,000 Bitcoin say to you, given the fact that we've attempted those levels a number of times over the last couple months?
Yeah, so my interpretation, again, it's neither a win or a fail. It didn't win because it made a new high and then it gave it back, meaning it's doing what is normal. When you return to a former high, typically you'll contend with it before exceeding it. And so it's been contending with the former highs for 1 month, and now 2, and now 3, and now into the 4th month. Being above or below that red horizontal line is irrelevant. It is something that's moved from what, 20,000 to 70,000. A $2 stock went to $7, and now it's backing and filling at the 7 level. Nothing has happened. The real question is, right, does it ultimately exceed the former high? Let's look at a long-term chart and put this in perspective. This is a log chart to sort of mute the rate of change, nonlinear, and let's put the lines in. Normal. What else? You took this thing to a doctor, he said, it's normal. What's wrong with this guy? All his stats are fine. He's got to rest here a little bit. He just went from $2 to $7. In this case, 20,000 to 70,000. Resting, consolidating. Does it have to break out? No, but that would be the normal sequence.
Yeah, that I think that's a great example of when you use a log chart there, and it gives you a sense of kind of just how far it's come, but it really adjusted for time. And again, if it were to continue to consolidate there, ultimately you might have this sort of breakout that we just saw in like an Apple. You know what I mean? Like, and there needs to be probably a little fundamental reason coupled with a technical reason coupled with maybe some macro. So I think that's a pretty interesting way to look at the Bitcoin. Let's go back to gold for a second. And Amanda, if you could pull up, a 1-year chart of gold, because it's interesting to me. You look at that breakout that had, and again, that might speak to the sort of move that you could have in Bitcoin under certain conditions, but there's a straight line higher. Okay. All right. So go and look at that consolidation right where her cursor is, Amanda, right around 2,200. If you look below that, and Carter, you just made the point. No, below that 2,200. It's from a couple months ago. There, you see that it made a little flag on its breakout there, and then it kind of had this press higher to this 2,300 sort of range. I mean, that would be all right. Stop doing lines because you just you're confusing the whole thing. No more lines. No more lines. Okay. So look at that from 2 months ago, that little consolidation when it made a flag there, Carter, 2,200 or so. Doesn't that look like if you were to get a move back to there for whatever reason, right? Something's going on with the dollar, some macro stuff, that would be kind of like a really nice reload level. And by the time it were to get back there, you'd probably have that moving average guy right in it up there. Does that make some sense? I mean, I know that, again, if it holds here after this consolidation that we've had for the last 2 months, then, ultimately it's probably setting up for a move higher also. But I just wanted to kind of look lower a little bit, guys.
Well, it's going to flush people out. I think the strong hands will remain. I think the pedestrians, the tourists will probably get blown out like some of them probably did on the back of the China news. But again, to me, the fundamental story is still in place. And with that said, silver is something a lot of people are asking questions about. Carter, I think we may have some silver charts as well, which, is now moving $1 seemingly a day. So let's talk about this.
Silver too, right? You have a big. We're all subject to recency. Whatever's happened, you think that's going to continue to happen. And then all of a sudden, it's trying to anticipate those things rather than reacting to them. But I want to draw the lines two ways to make a point. So is this a failure? Look at this. We move above a top. Now change it. Or is this just a check? Right, let's do them both. One, failure, or is it failure? Made it in high and couldn't take it? I think it's nothing. It's neither a failure nor win. It's something that gets to slightly above a former high, now backing and filling. But it really gets down to, does one buy this? Does one sell this? Does one say, to hell with this? I don't want to do this. I just want NVIDIA forever and play golf. Okay, that last thing's fine too. But my hunch is buy, sell, or hold, buy the dip in silver.
I love Carter Worth, don't you?
He does.
By the way, can we do an ISO on Carter real quick? Because I want to show that painting. I have no idea. I've seen this before, I think. But then Jacob, who does a great job, pull up that Francisco Goya. Now, see the similarities? I mean,
oh my.
I know there's a lot of similar. Look at the color scheme. Look at the
Are there any butts? That's got a butt in it.
Well, that's Mercury eating one of his sons.
Wow. Yes.
And Goya, I believe, lived late 1700s, early 1800s. He's one of the the great painters of that time.
I'm
He's
disturbed.
one of the,
all right.
Well, I mean,
Carter.
But you see what it looks like.
What's
I mean,
Carter, I think, is going to be viewed as one of the greatest
100%.
line drawers of our time as it relates.
It's more than
to
just
market.
a drawer of lines.
But what I'm saying is, we got all the expressions. The lines draw themselves. And you told me once about a mentor. You said if you have a ruler, you can draw a good line, right? Like, isn't that what he said?
Yeah, he said if you can draw a straight line, Carter, you'll be okay in this business.
Yeah,
pretty straightforward.
Ultimate
humility.
He's been more than okay. All right, Carter.
I like those rulers, by the way, before we let Carter go. Remember they had like the piece of copper running around the top of it?
They were kind of sharp.
They were great. And I used to pull that out.
You know why I think they did that? So like you could cut paper on it.
You think so?
I think that was the reason, guy. So you can draw.
You're right.
Yeah. All right, Carter Braxton Worth, we appreciate
pull it out,
your
like
happy summer.
You know where to find Carter, worthcharting.com. Go check it out.
Alan, we have a quote.
Well, hold on. I want to do a couple things here really quickly. So Guy, yesterday in the Fast Money,
I love that show.
We talked about the GM breakout. Let's look at this for a second, okay? Because this is super interesting, and this kind of speaks to a little bit of your question as it related to Apple and the breakout and the volume. And look at the move, and Carter just said it's going to depend on the follow through, right? So the fact that this followed through, I think, is really interesting. Then I want to go to Tesla, and there's a lot of stuff going on in Tesla. So tomorrow there's going to be the shareholder vote about must pay package. Ben Callow, who's a fine
found him on the podcast.
Yes, he's a fine Tesla.
He's another BK.
He is. He was at RW Baird. His note out this morning suggests that there's really good outcomes. You know what I mean? He thinks that the shareholder vote is going to pass the pay package, and he thinks that's good because that means Elon stays, very involved in Tesla, gets him up to a 25% stake, and he doesn't divert a lot of his attention as it relates to AI over to XAI, a company that he just raised $6 billion for. What's interesting to me, Guy, and we've talked about that move. So the stock fell off the chart, okay, in early April, after they released some deliveries, okay? And then they reported earnings, and you and I were like, not a good press into earnings, but we were pretty surprised. You had that one gap, right? And then you had that other gap, okay, that second gap here. And then we've really come in and we've consolidated. Today's price action, it looks like investors are a little nervous in front of this vote tomorrow, okay? What do you make of the price action today breaking? It hasn't broken totally down yet among that sort of, that consolidation, but it looks kind of precarious.
Well, so that's a shorter term chart, and I'm going to answer your question. Longer term chart, it makes perfect sense to me. I mean, the move from 144, I believe we traded down to on April 23rd. I think we almost traded to 200 in the subsequent, basically, couple of weeks by the end of April. I mean, we've seen moves like that before in Tesla a number of different times. But what did that change? Absolutely nothing. I mean, the upper left, lower right is still intact. The series of basically lower highs and lower lows effectively is still intact. And I don't think anything's really changed. I mean, the fundamentals have been poor for quite some time. Tesla has underperformed vastly the broader market over the last 3.5, 4 years. So to answer your question, I maybe you'll see a bit of a relief rally on the back of that vote, maybe, but I don't. Again, I'll just say this. I mean, I don't think it's broken any of the trajectory or any of the pattern that we've been in for quite some time.
Yeah, you'll be surprised by this, but I think it's going, 150 and then potentially 100, because if you don't see a pickup in China, if you don't see a pickup here in the US, I think consensus is still at 445 deliveries, 445,000 deliveries, okay, for Q2. And if it comes in where some folks that I'm kind of tracking, this guy Troy Tesla, I think he thinks that we're going to hit 420,000. Then you just you get negative prints year over year on deliveries. And then if this is the first year, and I think EPS is probably still too high, especially because we're still in a price war. So I'm fascinated, guy, to see how the stock reacts, whether shareholders vote to approve the pay package or whether they strike it down. Because to me, I'm not so sure Elon being that focused on the company anymore is probably the right path for this thing, especially as it's still a $500 billion market cap in a declining market, in a very competitive market. And also you have something where Elon believes something that a lot of other folks don't believe about the course of EVs right now. A lot of other automakers are really banking on hybrids. And the last thing, I read this morning, and I didn't even know this, but I've been in some Cadillac Lyrics, guy.
Excuse me?
LYRIC. This is their
by choice,
fully electric crossover SUV. And supposedly year to date, or maybe in Q1, but possibly in Q2, it's outsold the Model X, which I think is very interesting. That's the higher end crossover that Tesla has.
You know who will not be buying any of those vehicles?
You.
Yeah. I got zero interest.
Anything else?
A couple of things
that is interesting to you.
Yeah, and we have a couple questions that will lead to interesting single stocks.
Okay.
Freeport McMoran question: is it a proxy? And Mano will throw this up.
Yeah.
Is it a proxy for the copper market? And the short answer is yes, although not as pure a copper play as it was historically. But yes is the answer. Now, with that said, if you go back and look at where we traded in March of 2022. If you look where we traded recently, you'll see, that's somewhat problematic. We basically failed at those prior highs, not all-time highs, but prior highs. The all-time high, I believe, in Freeport was made sometime in 2010. I still like it. I still think the fundamental story is intact, and I say that because I said the same thing about copper. So if you like copper, Dan, I almost by definition, you have to sort of be enthralled by what's going on with Freeport.
Yeah, and listen, technically, pretty decent chart, back and fill towards that breakout level. It's probably a good spot to get in. Carter's charts and copper suggest higher, right? So I get that. Guy, I want to get your take on Oracle. Reports tonight after the close. It is their fiscal Q4. Last quarter, the stock gapped up 12% after its results. The implied move in the options market is about $9 in either direction. That's about 7% or so. The stock has been really volatile since that gap. One of the things that I always find fascinating, guys, like you get an upside gap and then you spend, the next month or so filling in that gap.
Yeah.
It doesn't speak to a lot of authority of the breakout because we know that was a big volume breakout, but it did come back to that 200-day moving average, rallied, bounced off of it, came back to that moving average, right? So here we are. We're probably in the middle part of that range in the last 3 months. So again, it's kind of in no man's land. Thoughts here. And the last point I'll just make is that their public cloud is about the fourth. This is behind AWS, Google Cloud, and Microsoft Azure. And you can think of a whole bunch of different ways that they should benefit, be AI adjacent here. Thoughts, guy?
Oracle was the O in my hope trade
from 2
I
years
believe
ago.
it was 2022.
Yeah,
I think. I don't remember.
I think it was.
But anyway, I mean, and if you go back and look, that stock had been left for dead, and all of a sudden it's sort of reinvented itself, and it was sort of off to the races in a major way. For the last, basically, I want to say since, I don't know, June of 2023. So basically a year ago, this stock has been volatile as hell, as you just mentioned. So we've been in this sort of 102, 125 range. And every time it gets to the current levels, which we are now, we seemingly fail. And every time it sells off, which has been on the back of earnings, we find support. I don't think that has changed. I think the bulls will say on valuation, they can make a really rational, cogent argument to continue to own Oracle. I get it. but the volatility around earnings have been significant. So
Yeah.
if you're asking me which you are, I think you're looking for a better entry point. And if tomorrow Oracle's 135, I'll say, I got this one wrong. But if you go back and look over the last year, we've been range bound.
Yeah,
and we're at the upper end of it now.
Interesting that you brought up valuation. So trades about 20 times next year's
Not
earnings,
crazy.
which is expected to grow 12% on an adjusted basis, and about higher a little, about 12%.
It's
Okay,
reasonable.
Okay,
It's
revenue growth that might get you to 10% or something
Mhm.
like that. Gross margin 73%. So if they can make a case where they're benefiting from demand for public cloud, in and around all these large language models and the like, I could see the stock basically back towards those prior highs. But much like Dell, let's pull up Dell for a second here. So this is also on the hardware front, AI adjacent, right? So they're making the servers that go in the data centers that are using the clouds and that sort of thing. Oracle looks very different than this one. This one was a moonshot, and after a consolidation, after the big gap that it had in the quarter that before it just was released, Dell could be setting up. I think you said this last week here, at the sort of right level, the prior consolidation. But I guess the main point is after that big run up, they did not guide in a way that was commensurate with the move prior to earnings. But Oracle, again, different scenario because it filled in the gap and it's right in the middle of that gap.
The Dell story has not really changed. What changed is the fact that the stock, to your point, had a moonshot, and they really had a crush in order for that to continue. And it was just sort of okay. Now, if you go back and look, and we've talked about this, the first all-time high was made in early March of this year. I think it was 125-ish. Then it sold off. Then it made a new high. Then it sold off a little. So I think what I mentioned that because prior resistance becomes support. And I've said for a while, I think 125 is sort of in the cards. And if it gets there, that's your entry point. Now, there's a very good chance it won't, and I'll miss it. But, you have to have levels that make sense. And that 125 level, to me, makes a lot of sense.
Yeah, and the last point I'll just make on Dell here is that, valuation can be like a tricky sort of situation because, again, a lot of folks on that whole ramp up were saying, well, the stock is trading below a market multiple. We know the S&P is trading 21, 22 times, that sort of thing. It's trading, at the time it was trading 18, 19 times. But the problem here is for this current fiscal year, which is 2025, EPS is only supposed to grow 8-9% or so on, revenue growth that is, about the same 8-9%. But the problem is this is not Oracle with 73% margins. And we've kind of pointed that out. This is 23% margins. So if you think that large language models are going to be commoditized, and that's basically what I took away from Apple Guy yesterday, the fact that they're going to use ChatGPT from OpenAI, they also, after the event, suggested that they're going to use Anthropic's Claude. They're going to use Gemini from Google. It tells you that, again, the models are commoditized. Those companies spent billions and billions of dollars, right, training the models, buying GPUs to do that, and then obviously getting into this inference phase. Apple's saying, we're just going to use the commoditized models and we're going to look to monetize it in different ways. So Dell, with those really, really tight margins, this is not one to me that I find particularly interesting.
A correction. I said Mercury eating. It was Saturn eating his son.
Oh.
So I stand correct. Thank you,
so
Jacob.
Saturn is a planet?
Saturn is a planet.
And it has suns? Are those the moons?
Okay, now you're just,
I don't know.
You're trying to.
I think we were off the rails on Godfather 2 to start. We're not going to go off the rails on the way out. Do we have a couple more questions?
Yes, we do.
From
this is from
viewers?
Steve B.
Okay.
Is XHB a short here? So XA, again, not the best, I don't think, ETF. I think the largest holding is Williams Sonoma. They're all about 3.5 to 4.5%.
So this is home builders and then adjacent retailers.
I mean, Pulte's in it, Toll Brothers
What's
is in
Carlisle Co's?
I don't
CSL,
know. I mean, that's my point.
2.
So Johnson Controls is in. Anyhow, the
you
short
love
answer
to use
is
that term, Johnson.
It's funny. Aaron, I've known Aaron Burnett since I started the network.
Yeah.
Aaron's my friend. Okay,
Yeah.
I knew her husband. I don't know. Am I doxing? No, it's out there in the public
you
domain.
Can go to the internet.
So Dave Rubalata is Aaron's husband. I knew Dave when I worked at Goldman Sachs at J. Aaron. He was our accountant.
Oh.
He wound up going to grad school. He went to NYU, I believe, and then he went to Citibank, and he did very well.
Mm-hmm.
Dave met Aaron at Citibank, and they got married. So you say, where are you going with this?
Where are you going with this?
Aaron was interviewing a guy, and she said, when we come back,
oh yeah,
we're going to talk to Huge Johnson.
Yeah, but it was Hugh Johnson.
Hugh Johnson.
H-U-G-H.
Yeah.
Not
And-
H-U-G-G.
And I was watching the TV at the time,
Yeah.
and I was dumbfounded.
Yeah.
And she's very sweet. Like, she probably didn't even realize what she said.
No way.
Because she's very innocent.
Yeah, she
But
would
for an
never do
asshole
that.
like me, I mean, that's like
Oh.
a dog with a bone.
Yeah, you knew exactly.
Anyhow, Johnson controls. We're back to the XHB. I think it can trade to the moving average for sure. And if you look, we had this lower left, upper right, but this last move higher did not take out that prior high. So, it feels as if we're rolling over a little bit. And given what's going on with the banks, I think it makes sense that the XHB is probably a rollover here as well.
Yeah. Again, there's a lot of charts that did not. That's a great example. It did not confirm the new highs in the S&P, right? And you mentioned the IYT. I think we talked about it yesterday. Industrials. Let's just pull up the S&P 500 futures here, guy. The E-minis here, because you can say what you want about the data. You can say what you want about dot plots tomorrow and this and that, whatever. You can say what you want.
I've never used the term dot plot in my life.
but it's a thing.
Yeah, I know there are a lot of things that are things.
But and you can say what you want about higher for longer and what that means for risk assets or the potential for the Fed to get more dovish and lower rates, and that's good for stocks. It seems like no matter what the Fed does with rates, it's going to be good for stocks. Look at the S&P E-mini futures here, guy. Take all that stuff away. Looks like a pretty constructive chart right there.
Nothing not to like. I'm just saying,
listen, I'm not telling you I'm getting.
If
like
I'm being honest,
but
I'm not bullet. But and that leads to the question that Eric Clifton is actually asking.
Yeah.
How does every single intraday drop bounce right back? Always.
And at the end of the day, have you noticed that a lot?
Yeah.
I mean, so we have the S&P. They were down, I think, 40 basis points at their lows. The futures guy. And look at this, right now they're down about 20, they cut half those losses in. And maybe by the end of the day, we're going to have a headline that the S&P 500 closes at new highs.
Right.
Every day.
All the banners.
Every day.
That's it for me.
You're done?
Well, no, there's a lot of day left, but it's 147.
Yeah.
We've been at it for a while.
Yeah.
And you're in your comfortable shirt.
I am. It is actually very comfortable.
By the way, you had a great conversation on the OK computer.
Oh, yeah, with Dan Niles.
So why don't you talk about that?
Niles Investment Management. So Dan and I, we recorded it yesterday afternoon. Dan, I've known for, like 27 years. When I started in the business, 1997, he was one of the axes in Dell, actually.
The what?
They say when it's sell-side analyst.
The axe, the person that has it by the balls.
Yeah. He was an axe in Dell and a bunch of these other hardware companies at the time. We just called them computer companies, but they were benefiting a great deal from, the excitement in and around the internet. I mean, a lot of what's gone on in the last 2 years around large language models and generative AI is very, very reminiscent of what we saw in the late 90s and the early 2000s. No one can see these stocks ever coming in. You see a company like Apple at its size joining the party right here. You say to yourself, well, this is just confirmation, guy, of a lot of these themes. I'm just a little bit more skeptical, not about the technology, about the market's reaction, both public and private markets. So I think there will be a little bit of a reckoning at some point. I've been saying that for a while, but as we see some of these things kind of churn a little bit, I think it gives more evidence that we are likely to see that.
We had a birthday yesterday.
Oh, yeah.
The 3-week birthday, I think it's a 3-week birthday of Brunson.
Yeah, Brunson. So this would
why don't you throw that up?
Generative AI. No, it's not generative. It's AI generated.
I didn't. You said it.
No. But I wanted to do this, and I wanted to say that in particular because it's important, right? So there's lots of forms of AI. So we're using Perplexity, which is an AI company, which actually uses a lot of these different large language models. You can choose to use ChatGPT 4.0. You can choose to use Anthropic's Claude. You can choose to use Gemini. Well, actually, I don't know if you can use Gemini yet, but you can choose the model. And basically, we curate the stories, our team. We
look them up. We send them in all day.
What we think are the most important market-moving stories that if you're not staring at FactSet screens like we do all day long, that this can get you up to speed. We take the text of those stories that gets punched out from Perplexity. We put it into 11 Labs, which is a voice
Sounds
bot.
complicated.
No, it's not.
It's like baking a cake.
Our team is amazing. All right. And then we get this under 10 minutes, this AI generated podcast that's spoken to you by our friend Brunson.
Mm-hmm.
He's not real. He's just in the ether guy.
So it's like a fake friend,
Yeah,
a make-believe
he's
friend.
an AI generated friend, Brunson.
I didn't have, by the way, I know a lot of people did have make-believe friends growing up.
I didn't either.
I didn't.
No, it's not something that you and I did. But go to your favorite
I talk to
podcast
myself.
store, or it doesn't have to be your favorite. It could be wherever you get your podcast. MRKT Matrix. That's the podcast. Download it, follow it, rate it, review it. People ask us all the time, how can you help us? That's how you can help us, because it helps people find the podcast.
Yeah. Discovery.
Yeah.
We talked about trade ideas.
We did do.
But if I wanted to find those,
oh, look at that.
My God.
Riskversal.com. We're going to keep up doing a bunch of the option ones.
Why not?
Can I do one thing here?
Whatever you want.
This isn't GameStop. I want to talk.
GME.
I want to talk about this really quickly because, again, we don't have to get into the merits of Roaring Kitty, but the price action is fascinating to me. Let's just pull up a chart here really quickly. GME is the ticker. We know what happened in 2021. We know that this guy got shit rich, getting everybody else. I think this is really important. Let's do a 5-year really quickly. Getting everyone else involved, getting them geeked up about it. This guy made a lot of money. You've made this point on many occasions. You don't want to talk about it because you don't want to draw attention to it. You know why? Because the bag holders are the ones that more that people talk about it. Okay, so here we are. Let's go back to the 1 year. All right. He used the same opportunity. Okay. Volatility had come in. Maybe you saw short interest tick up. People weren't paying attention to this thing. He built this position in stock and options. You saw the move that it had. So he had this webinar on YouTube last week. 2 million people watch it. The thing sells off 40%. Yesterday it was off 12%. I think it's down. It's up a little bit today.
It's up, I think, 11%.
Okay.
I mean, again,
last night he posted his positions. 5 million shares long, 120 of the June next Friday expiration 20 calls. He also paid, this is the most important part of what I want to do here. What do I want to say here? He paid $568 for those. So he told us. So if you think about that, the strike price,
26 bucks.
It's basically 26 bucks that he has to have this thing close above to make money on those. But here's the deal. Okay. He could roll those. That's what I thought he would probably do. He doesn't need time moving against him. But right now, if you look at those June 20 calls, they're just up a little bit with the stock here. So maybe he gets somebody to roll them and he gives himself more time. Okay, up and out that's what we'd probably do here. Something above the 20 strike and out longer than the Junes. So this is going to be fascinating to see, Guy, because essentially those in the money calls are basically trading like stock. But if the stock goes lower, right? So let's say the stock's at 24 on Monday, they're going to trade at not a huge premium to $4, right? Because it's the strike plus the premium. So he's basically losing money the longer this goes and the longer it gets closer, if it does get close to that 20 strike. So it's going to be fascinating to see what he does. The last point I want to make is that when he went in and bought those 120,000, he bought those from market makers. He bought them from dealers. They sell him the calls, but they delta hedged it by buying the stock, which helped the short squeeze and helped the stock go lower. But as the stock gets closer to that strike, okay, it's basically, you could see these market makers selling stock. So it could exacerbate the move lower. All right. And so whole host of other things. If he goes and then he rolls them, okay, then dealers may have to sell stock too, right? So again, interesting setup here. I'm fascinated to watch how it goes because at one point when the stock was at its highs just a couple weeks ago, he was supposedly a billionaire or something like that.
Look, there's, he's got a vested, I think somebody bought, wasn't there $65, $70 calls being bought, 100, whatever.
Yeah,
I mean, it's the
well,
gamification.
Again, it goes back to bag holders though, Guy.
Well, he's having, you build a position and then you have the minions, the army do the work for you.
You suck everyone in.
And, they do the heavy lift and you hope it works. And if it works, but it's not, but it's just not, again, people get mad at us. It's not based on anything fundamental whatsoever at all. I mean, it's a broken business model, as is AMC. And, this speaks to what Einhorn talked about a couple months ago, the broken market. And I think this is emblematic of exactly that.
Yeah, and again, I think the good news here versus 2021 guy is that, back then it sucked a lot of stocks up in with it. You know what I mean? And the thing that you and I were basically cautioning at the time is that these stories don't end well. So the more situations, the bigger that become, it's more like the little guy actually gets screwed. They thought they were sticking it to the man, and back then there were some hedge funds.
Again, yeah, I know, and I've said it before. I have no idea. I really don't understand what that. I mean, I understand what each word by itself means in the context of what we're talking about. I have no idea what they're.
I got you,
dog. I think it's misguided, but
it's what makes a market.
CPI tomorrow, fascinating. So stay tuned for that, sports fans.
Yeah. So, Guy, if it's just like in line, what do you think yields do? Now, do they not do a lot before the Fed? That's the other thing. It's out at 8:30. You know what I mean? And we know that the Fed's favorite. What's their favorite inflation?
The PCE.
Rate? The PCE, not the CPI.
I know, but it's market moving without question. I don't know the answer. I know how people will spin it. I mean, but I don't know the answer to that. And
all right,
but I'll be watching.
Has our time expired here?
A while ago.
Yeah. All right. Listen, we appreciate Carter Braxton Worth of Worth.
He was on with us.
He was on for a while with us. We
Seems appreciate like 4 shows ago.
Your analysis of Godfather 2, because I think that slightly edges out your like for Godfather
2 was, I think, a more interesting movie.
Yeah, because you had the flashbacks, you had Robert De Niro in it. He was a
and
great
it put a lot of things
Vito
in context,
Corleone, wasn't he?
Unbelievable.
Yeah, amazing.
No, De Niro,
and Michael just came into his own.
Well, of course he did.
He was you said he was a killer. He never pulled the trigger.
No,
but he was given the order. Except our friend, Don, who said,
no, that was Brando. That was. I know what you're talking about.
Yeah,
that was Robert De Niro as a young Brando went back to Sicily and he knifed that motherfucker. Pardon me.
Excuse you. I'm totally spacing on the guy who Chi-Chi's boss who was going to testify.
Willie Cheech.
Yeah, no. Who was going to
No, but he didn't have anything to do with Frank Pentangeli.
No, Frank Pentangeli. That's what.
No.
But Frank was going to corroborate Chi-Chi's story.
But,
that was directly.
What Michael had nothing to do with it. That was old man Hyman Roth pulling the strings there.
That's right. Well, I mean, again, they kind of used
the message from Michael Corleone. Yeah, but it wasn't from Michael Corleone.
Yeah, but
Frankie didn't know. Frank Pentangeli didn't know,
to be dead.
And that's why he was gonna sing.
Yeah,
but then his brother was brought back from Sicily.
Yes,
and then when he saw his brother there, he realized
demanding an apology from that. You know what I mean?
That son of a bitch senator.
What about when Tom says, "Why do you hurt me, Michael?"
I mean, Tom. Listen.
Yeah, we could do this for a while.
First of all, I hate to say it.
Yeah.
But Tom was Irish. Okay.
Yeah.
And I'm sure there's still people here. Amanda's texting us.
Yeah.
The Italians and the Irish don't get along. They marry each other.
Yeah.
But let's face it.
But that goes back to Goodfellas too. De Niro's character, he was Irish.
Yes, he was.
To be Irish.
I'm going to take all your guineas. I'm going to take all your guineas money. Remember that? Remember that scene?
Didn't look particularly Irish. Let's be honest. Okay, let's get
so,
out of here.
Amanda,
Listen, we appreciate you guys. Listen, as Guy says, Godfather 3 should not be in the trilogy. 1 and 2, go out and watch if you haven't seen it.
This is from Amanda. Wrap.
Hopefully, we haven't seen. Hopefully, there weren't any spoilers out there because we hope that all of our viewers and listeners have already seen 1 and 2.
See you later.
All right, bye. Thanks.